Hello, my friends. Brett Pattison with Iron Gate Global Advisors coming at you from the financial capital of the West, that is Salt Lake City, Utah. Thanks for spending a few minutes today as we address two very important issues that are facing investors. The first issue is that of income investing and finding any income in the market today. As you know, interest rates are at record lows. There's no real sign that that's going to change in the near future. So where can investors find good income in a market that is largely overvalued any income investments? The second issue is similar to the first in that we have stocks trading at all-time highs. Many of the stocks, especially dividend-paying stocks for people that are trying to find some income, are overvalued to the point to where we as a firm, we look at those and they're not really the kind of investments that we would love. So how do you, number one, find income that's worth investing in, and how do you find stocks and buy stocks at levels that you're comfortable buying them at? Those two things are what we're going to address as I share one of my favorite strategies that we implement for clients here in the next 3-4 minutes. So let me run through a quick example of how the strategy works. Number one, we have to have a stock that we love, right? That's the first important thing, is that you only do this strategy on stocks that you love and stocks that you wouldn't mind owning. Here's an example of a stock that's had a pretty incredible year. I have no ticker symbol listed for the sake of compliance, but it's had a great year. In fact, it's up 42% year to date. The problem with this stock is that in our minds, while we would love to buy more for our clients, it's trading at a level that we're not comfortable buying. It's a little bit stretched at these current prices. However, if that stock were to pull back to $85, I would be more than happy and more comfortable buying that for current clients and for new clients who may not be in the investment yet. So I look at that 85 level, and that's the second thing you need to consider. At what price are we comfortable buying that stock? Well, 85 is the price I'm comfortable buying that stock. So the next step is that we need to consider selling a put, and that's the strategy, is selling a put. You can see on your screen here an option chain. I'm going to keep this very high level. Certainly you can reach out with any other questions. But before you look at that option chain, which has a September expiration, you can see up there in the upper left-hand corner, September, 52 days left till expiration. Before we even look at that option chain, which I keep looking at, I'm going to describe what selling a put means. Right? And what happens when you sell a put is that you enter a contract. That contract obligates you to buy that stock at a certain price in the future. At these levels, I said I was comfortable buying the stock at 85, and so I could sell an 85 put in September. What that means is if the stock falls below 85, it trades at 85 or lower, I'm probably going to have to buy that stock, which I'm okay with because I really like the company. So that's what selling a put is. It's a contract that obligates you to buy that stock at a certain price in the future. So what do you get by entering that contract? You receive money, otherwise known as income, for entering into that contract. If we were to sell the 85 put, for example, for every one contract we sell, which controls roughly 100 shares, for every one contract we sell, we're making the bid, which the arrow's pointed at, is $1.85 or $185 for selling that 85 put. So I have $185, and I could probably get a better feel for that. You can see 185 by 275 is the bid-ask spread. You could probably get, I would say, $2.15 for selling that put, which equates in a margin account of about a 25% return on your capital, which is a pretty darn good income investment. And say the stock just keeps going higher. It never goes to 85. It stays at 90, 95, or earnings come out and it's at 100, 105. Then you keep that $1.85 or $2.20, which $2.15, $2.20, which I think you could get. You keep that. And you realize on the cash that you're tying up in a margin account, you realize about a 25% return. That's great. If the stock falls, great. You're buying it at a discount. What do I mean by that? You're receiving, let's keep the math easy. Let's say you receive $2 and you're forced to buy the stock at 85. Well, you received $2 or $200 for selling the contract. So 85 minus 2 means that your cost basis on the stock is essentially 83. So you're buying the stock at a discount or 83. That's the strategy. That's why we love it. So what are the risks? This strategy sounds almost too good to be true. What are the risks? And there are risks involved. The biggest risk is the same risk that you would see for buying stocks. If that stock falls to 75 or 70 or 65, you're losing money, right? You're losing money by that stock falling in value. And so you have to be confident as you sell a put that stock is something you want to own. And you have to understand the level at which you're willing to own it. That's the risk. There are also commissions that play a part that you would have to deal with. But for all of that, the potential for fabulous income and potential stock ownership at a level you're comfortable with, that's pretty attractive as long as you understand the risks. As we always say, we're not shooting for returns. While that 25% return on a margin account is fantastic, our process for investing is not results driven, but we focus on the probabilities of making money, standard distribution curve, right? We manage the tails, but we focus on the good, solid trades and investments that have a high probability of working for our clients over the long term. And certainly this strategy fits that profile. If you want more information, you can go to this website, this URL. Misunderstanding options is one of the mistakes that too many investors make. Not understanding how options can help a portfolio. That's one of the 6 mistakes that we talk about in this ebook that you can download on igga.com/6 mistakes. If you have any questions, feel free to reach out. Would love to chat with you about one of my favorite option strategies. My email is Brett, BRETT, @igga.com. This is a strategy that 98% of advisors don't use in the world today. We are one of the ones that use them. If you want more information, give us a ring. Thanks.
This is a purely public broadcast and is not intended to be personalized financial advice for any individual's specific situation. Each individual's financial situation is unique, and the topics discussed on this broadcast should not be relied upon and or considered as personalized advice. Specific financial securities discussed are not intended to address any listener's particular financial situation and should not be considered recommendations. This is for educational purposes only. For more information, please contact Iron Gate Global Advisors at info@igga.com or by calling 888-591-0334.